How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 38 to the Asian Session Library. Once again, with the same pair, US dollar versus Japanese yen. Wednesday night, the 21st, February 2024, we had a successful Asian Session model. Let's walk through it together. As always, we're utilizing the liquidity pool that is built up between 12 p.m. to 8 p.m. That is our dead zone. The market is most likely going to go into a phase of consolidation or accumulation. It's building in buy stop orders and sell stop orders. Overall, it's making market sentiment. It's building in both sides of the market. We're framing this on the 15-minute time frame. I love to frame it on the 15-minute time frame because it makes things so simple to see. Anything above a 15-minute swing high is buy side liquidity. Anything below a 15-minute swing low is sell side liquidity. The idea of this model is to catch a turtle soup or reversal phase, a false break. While traders are looking to break out long, we're trying to be counterparty and go short. While traders are looking to be breakout short, we're trying to be counterparty and go long. So let's see what happens tonight. So you see price comes up, opens, Asian session open here, and the price runs up and takes out that 15-minute swing high here. So if you see here, there it is. Price right here at 8 p.m. runs up, takes that out instantly. So we have buy side liquidity purged. At this point, the stance I will be taking is being a seller. The reason why, two reasons. One, we broke buy side liquidity, right? We're running buy stops. We're triggering order stops there. And we're also above 8 p.m. opening price. So we're in a premium. So I love those conditions. At this point, I move on to the next step, which is looking for the entry technique. I go down to the 1 minute time frame, and I'm looking for a fair value gap that runs a swing low. We can see it happens very early in this session here. So sometimes the entry technique takes very quick to happen. Sometimes it happens in the middle of the session, or sometimes it happens in the very last hour of the session. This one happened very early. This one happened to form at 8:11 p.m. Very early. So what we had to do is wait 11 minutes to get this entry technique. And we can see here, that's the fair value gap that runs through what? The swing low formation right there. That's the entry technique I've been showing you guys the last handful of episodes. It hasn't changed yet. Notice as well, this entry technique is forming physically above 8 p.m. opening price. Anything above 8 p.m. opening price is a premium. This is where the ideal sell conditions are coming in. Premium, if I can spell, ideal sell setups. Now, it doesn't mean just because price is in a premium, you must sell. You need things to be aligned, and you need a story to tell. The story is we rated buy stops here. Anybody that was a seller and had a stop loss above this high has been knocked out the market. Now, traders could then flip their side and say, instead of going short, I think the market's going long. So they were once short, had a stop loss up here, and now they've been stopped out. Now they can be getting out their longs and saying, you know what? I think I want to go long now. Breakout continue. So I'm going to wait for some type of retest or some type of retail pattern to go long. And that's what they do. However, I tell myself, no, we are not using retail logic. We are going to stick to the script, knowing that the algorithm is going to give us some type of scenario like a turtle soup. And that's what we're banking on. We're banking on a turtle soup unfolding after rating buy side liquidity. Now, if we're framing a sell setup, what would our projections be or our draw on liquidity be? Sell side, pretty obvious. The first area or easiest target would be Asian Open. So price returning back to Asian Open or fair value. So it's not a premium and it's not a discount. It's the opening bid. And then some lower going into a discount and targeting the sell side liquidity, right? Counterparty liquidity pools. So price went up. Now we're looking to go short and take out the counterparty. Sell side liquidity now. We're looking to go short. So what we do is a one-to-one scenario. That's how I like to do it. And we're risking 15 pips for 15 pips. So a gain of 15 or a loss of 15. And within this, we could be risking 1%, 2%, 3%. 4% is pretty aggressive. I wouldn't recommend that. Or even a 0.5%, if you're very conservative, using micro lots. And that's how I would go and tackle my risk parameter there. We play it forward. We look to scale out anywhere from 10 pips into that trade. Scale out, probably even move the stop loss if you're happy with the results. If not, keep the stop loss where you have it, because there are times where the market will come back up and stop you out. That's just the general premise of the market. Get rid of that. And you can see now, price targets all the sell side liquidity pools, right? At 12 a.m. at the end of Asian session, the trade is successful. Sometimes the trade isn't successful until after true day. So if you're still holding that trade after Asian session, which you can, right? There's no rule saying that you have to close the trade out at 12 a.m. You can continue to hold it because at times the market does give a trending setup. And we've seen many times where on certain days in particular, the market will give a setup and this setup will trade on into the next trading day. Notice as well how price pulls itself back up into a premium again one more time and then finally sells off. So the ideal sell setups are happening in a premium. Notice as well when the market started to turn around and rally up, it's happening below 8 p.m. in a discount. It's rigged. All markets are rigged. The market makers, the algorithm, the entity that controls the price action is going to put itself in the best case scenario for whatever setup it needs to take. So the best buy was down below Asian Open, and the best sell was above Asian Open. Not to say we were looking to predict this buy setup, but just looking at it in just raw form, right? No indicators. We can see how the market is very methodical in pulling itself and putting itself in an environment where it suits itself for the buy and it suits itself for the sell. Hopefully you found this insightful. Peace.